watching In Your Interest and I am Shweta Kothari. There is a flood of initial public offering or IPOs on Dalal Street as of 2024 with the average of about 47% returns across all IPOs. Now, so far this year, about 62 companies have mopped up a total of 84,512 crore rupees in the IPO market, the highest since 2021. The IPO season in 2024 has also broken an 11-year record with fresh issues surpassing offer for sale. Now, this trend indicates that companies are raising funds for growth and expansion rather than deleveraging. Major IPOs include Ola Electric Mobility, Bajaj Housing Finance and First Cry. The pipeline is also looking strong with upcoming IPOs from Hyundai Motors India as well as Swiggy expected to hit the market very soon. Joining us on the show is Nishchal Maheshwari, who's a market expert. He's going to make sense of what's happening in the IPO market. Also with me is my colleague Suyash Maheshwari. Suyash, I think I'll begin with you. There is a flurry of IPOs. We're looking at about 62 IPOs with a total of about 84,000 crore rupees raised so far.
Yes, Shweta, certainly IPO galore for 2024. And certainly this is typically the case whenever the market is in a bull run, and we are in a bull run. The Indian markets have performed exceptionally well in 2024, and this is despite the geopolitical concerns and concerns about recession in other countries. Indian markets have moved beyond that and performed and given tremendous returns for investors. And looking at the IPOs this year, 62 listings so far, 85,000 crore rupees have been raised, and which again, as you pointed out, is the highest since 2021. And we have another 3 or 4 big IPOs coming in the next 3 months. Hyundai is coming out with an IPO, Swiggy is coming out with an IPO, Hero MotoCorp backed Ather is coming out with an IPO, NTPC Green is also looking to list that, and the 4 companies together could raise around 40,000 crore rupees. So 1,21,000 to 1,25,000 crore rupees the primary market will be able to raise in 2024 alone. And that said, Shweta, I think the quality of companies that are going for listing has also improved substantially.
Absolutely.
And typically in the case of a startup, earlier what we saw in 21 and 22 was that the companies that were coming to the primary markets, they did not really have a concrete plan towards our path to profitability. But the companies or the startups that are coming out now, at least if they have not already turned profitable, they have a clear-cut path to profitability. But there are 2 concerns that I think that investors need to be cautious of. That one, that about 50 to 55% of the retail investors, they exit IPOs or that got allotted to them within the first week. So clearly that brings a lot of volatility into the system. And even though if a stock might get listed at about 25 to this year's average is about 49. So if a stock gets listed with a 49% premium for a first few months, we'll see a lot of volatility, and that makes it very difficult for an investor who wants to come into the market and stay for the long run.
So caution there for secondary market.
For sure. And second, I think, is this boom that we have seen in the SME IPO space. Without taking names, there are several companies that have come out and listed in the public in the SME space without having much to show for in terms of earnings or revenue. They'd have one facility and they are raising like hundreds of crores of rupees, and retail investors and qualified institutional buyers, they are lapping up their shares. So that I feel is concerning, because one, we need to understand that SME space is inherently more risky. It is not overseen, or at least the listings are not approved by SEBI, which is the market watchdog. They are approved by BSE and NSE, and the minimum ticket size is 1 lakh rupees. So I think as far as the SME, this boom we have seen, retail investors need to be cautious about that, because we don't really understand the quality of the company and they are not going through the checks and balances that SEBI makes them go through.
All right. Thank you for setting the ball rolling, Suyash. But let me take this question to Nishchal right now. Nishchal, I think there is a concern here, especially with SME IPOs. Would you agree with what my colleague has to say? Suyash is pointing out, of course, that some of these companies are very minuscule. They don't have a path to profitability. Some of them have just one facility, not much to show for.
Evening, Shweta. Yeah, I agree with him basically, but the only difference remains to be, I think that's why they are SMEs, and they are raising, I think, not more than 25-30 crores. And this is very clearly a sort of a VC kind of a market out there. So people who are investing, especially the retail investors, they have to be aware that the risks are much higher than on the larger exchanges listing, because there the issues are vetted by SEBI, and there are very, very strong merchant bankers who also do their own due diligence. So yes, the risks are much higher, and but that is the way basically the SME exchanges have been planned.
But apart from SME IPOs, Nishal, are you worried about the frenzy in IPOs that we are seeing? We're looking at, of course, substantial gains here for the companies that have listed so far. But should retail investors be worried?
So I've been worried about it for the last 6 months, but I think the music is still on. So to me, I think basically the best thing is to play while the music lasts. So yes, you need to be more cautious, try and do your own due diligence basically, and try and invest into quality IPOs. But I think that worry, yes, it continues to remain there, but this wall of liquidity just continues to drive away everything.
Okay.
So play while the music is on.
All right.
And Nishal, what do you think about this interesting trend that has just propped up that 54% of retail investors, they are exiting the shares that have got listed within the first week? I mean, that brings a lot of volatility into the system. And what should a investor who's looking at this company for the long term do? I mean, how should they go about investing in companies that get listed, let's say at 50% premium, but because of excessive selling, that listing gains get pulled out very quickly, and investors, at least the long term ones, are left holding the bag?
So to think through it, basically, I think this volatility, once these HNIs were, that market basically became extinct in I think 4 or 5 years back. They used to be another force basically which used to absorb a bit of this thing of the retail selling. So that's why this kind of volatility. But for a long-term investor, it is good only if he wants to hold it and buy more. So then he'll have enough liquidity basically because each of these small investors basically coming and dumping the stock. But that is, I think, IPO market has become a sort of a lottery only, and people are really cashing it out.
Okay.
But to compare it with the lottery, I mean, your funds on, it's not like you're losing money, right? If you are not allotted the stock or or you don't get allotment of that particular IPO,
You get your
money,
principal money back.
you get your principal money back, right?
Yeah, so I'm saying basically the allotment itself is a lottery. So 1 in 10 or 1 in 20,
Of
1 in
course.
100, that kind of a thing is happening. So that's a kind of lottery basically which people are playing.
All right. And I also quickly want to understand, what does that really mean for the secondary market? Because there's a lot of interest, of course, here, incremental flows in primary market. Does that spell some sort of caution for listed stocks?
Yes, I think so basically because this kind of, if you go back and look into history, every time all these kind of issuances basically has always been very close to the top of the market. You remember 2008, 2013, all of these issuances, large issuances basically always cause this market to top out. And we are now started seeing basically issues coming in multiple thousand of crores. So I think Hyundai is coming with a 25,000 crore IPO. So I think these are all very close to the tops of the market. One need to be very, very cautious. We have started seeing funds basically which are now almost 15, 17% of their AUM into liquidity, into cash. So I think funds are becoming cautious. People need to be very cautious about at these levels.
All right, and speaking about Hyundai, I was reading this very interesting that has come up that in Korea, Hyundai seeks a valuation of about 4 to 5 times of its earnings, whereas the listed peers or the automakers here, they enjoy a valuation of somewhere between 20 to 30, and that is why maybe Hyundai is coming and listing in Indian markets to get that India premium, so to say. And a lot of these Korean companies and Korean family-owned businesses, they might also try to take advantage of that India premium. Do you see that trend happening anytime soon?
It has been a trend which has been there for long, Suresh. Basically, if you look at all the MNCs which have got listed in India from 1970s onwards, basically all the India market has always traded at a premium. And there is a reason for that because the growth is very, very strong in India because India is an emerging market and where they are, it's mostly a saturated market. So if you look at it, whether it was in European companies or American companies, all of them were working in a market which was growing at 4-5%, whereas their Indian subsidiary was growing at 15-20. So that's why Indian subsidiaries used to get a huge premium and they all cashed out. We are seeing similar kind of situation now happening in the Korean companies. So maybe Hyundai is a start, and Samsung, LG. I think there are a lot of Indian companies, Korean companies, which are very big in India. So some of these might get listed in the times to come.
All right, and before I let you go, I think the most important question that our viewers have been waiting for, and that is bigger issues that are coming up, including Hyundai. And four such issues, four such companies alone are likely to raise over 36,850 crore rupees in the market. Should one invest in these IPOs? If you could run us through what your pick of these IPOs is, which is your top pick to begin with, and should one invest or not, or stay away?
Is that question for me?
Yes, it is for you, sir. Yes.
Okay. So I have not done much work on basically whether it is Hyundai or Swiggy, or these are the two I know. Other two I don't know basically which issues you are talking
Ather
about.
and NTPC
Ather,
Energy.
NTPC.
Ather
Green.
and NTPC. I think among the four of them, basically, if I would have to make a pick, then I would actually go with the NTPC Green, because it's a very well established company. It's getting split out of NTPC and has a very strong track record. Second is obviously Hyundai, again a very strong company. Then third is Swiggy, basically, because it has already got its peer listed, and though the profitability is not there, but I think that's the way basically I would play. And then the fourth is Ather, basically, because that's a EV market is still very, very in a nascent stage. So that's the way I would play it. But given that I have not looked at it in detail, this is just a very off-the-cuff remark.
Okay, so as per your off-the-cuff remark, I want to repeat that your top pick will be NTPC, followed by Hyundai, followed by Swiggy, and followed by perhaps Ather.
Yes, yes.